Well, hello, traders and investors. I'm L.A. Little, and this is your weekly NeoTA wrap. We take a look at these markets from a neoclassical perspective, and that means each time we ask ourselves what happened last week, where it was significant if it was, and if so, what does that mean for the coming weeks? And last week, folks, it was significant. We're going to look at that here in a minute. We do this show once a week, every Sunday evening, broadcast started before 10 o'clock Eastern Time, archived on YouTube, son of a channel LA Little. And if you want to subscribe, reach up in the right-hand corner and do so. Anytime content's pushed, you'll get a notification, lets you keep up with what's going on. As far as what's happening, let's start with Friday. The last two Fridays, we've seen sell-offs. We saw it the prior Friday, and we saw it again this Friday. If you look at the S&P 500, almost 1% lower. You had more than 1% lower in the high-tech, NASDAQ, and the small caps, and the Russell. And the Russell actually led on the way down now for the past 2 days. So you're getting some sell-off, but the real problems are emanating over in Europe with the DAX down 2.5%. It looks like people all of a sudden are starting to worry about the Brexit and the vote over in Europe, and potentially maybe what the Fed's going to do. Not only did Europe sell off, you had Asia sell off. So you had it across the board pretty much everywhere you looked. The only thing that didn't sell off, even though the dollar itself went up almost 0.75%, gold market. Gold market did not sell off, neither did the silver, and neither did the bonds. What this tells me is people are running to safety, right? They're running to safety in those areas, and they're avoiding the others. And so that's kind of the backdrop as to what's happening. If we pop up and we look at the ending numbers for the week, 2.5% lower on the NASDAQ, 2.5% higher on pretty much everything else. Almost the same place we were a week ago. Let's take a look at the charts here. We'll start with the S&P 500. If you look at the S&P 500, you come off pretty hard on Friday. This thing jumped up to start the week, right? Looked like it was going to break out and just held up there until Friday, and then just gave up the ghost on Friday, down 1%. Volume expands a little bit. You try to get over the swing point high. You do. That's on the daily, but the problem is on the weekly, not on the daily. Let's bring the weekly chart over. And at the top of the show, I said, it's about what's significant. And the significance, if we look at these charts, the significance on this particular chart is the breakdown area from the first time we came down over a year ago, or almost a year ago in August. It was this area right here, right top of this big wide price spread bar. That was the breakdown out of, if you remember, about a year range that was going on back here. They break it down hard, they shoot it down, then they eventually push it straight back up, consolidate for a while, look like they're going to try to go up. No, break it down again, right? Shoot it back up again, consolidate. Now what? Are we going to go breaking back down to the backside again? Or are they going to somehow collect themselves and finally break this thing out? And that's really the question. But the problem is so far, they keep telling us they can't break it out. They can't get over this number. They can't stay over this number. And not only that, they test swing point highs and fail to get over them. That suggests this thing's going to try to back down to start the week. Given that the Fed releases its information on Wednesday, then you got Japan as well on Wednesday night, and you've got Europe with the English vote on the referendum next week, Thursday. I think there's a lot of information packed in here that's going to keep this market under wraps at best and potentially sell it off. And now if we look anywhere else, you're going to see the same story. I don't know that there's a lot more to show you. It's the same story no matter where you look. Let me quickly move over to Europe. And in Europe, if we bring the weekly chart out on the German DAX, it came up, tried to test at a high. Notice it's the same sort of setup that we just talked about on the S&P. This is your breakdown bar. The bar we were looking at on the S&P was way up here. That was from the August high, or actually the August break. Here, German market is just trying to get back to the breakdown that took place at the beginning of this year. Can't get to it, can't get over it, sells back off. This looks like it's going to try to trade back into the high of the low. That's the German market. If we look at the CAC, which is the French market, you're going to see the same sort of setup there. comes into the breakdown bar, this area that I'm highlighting, does the same thing, right? Starts to break down. And if we look at the Swiss market, which has been the strongest market now for the last 2-3 weeks, actually the market that's been giving us the best signal. And on that market, I've got the daily chart up to start with. You can see the escalation that took place on Friday. Here it is. What were they doing? Same thing. Coming back to the breakdown area from the beginning of the year. Actually, in their case, you know, this market had been the weakest market in Europe because the currency had been the strongest. And actually, let me change this up. So here's the breakdown bar from August, which was at the highs. Then you had the breakdown bar begin right before the end of the year and then continue in February. They were just trying to get back to the February breakdown bar. Got up to it, give it up, back the other way. It's already into that price bar that I was just talking about on the CACs. Looks to me, and on the DAX being the target, looks to me like this one's going to come try to test the swing point low here and potentially that high volume wide price spread swing point low there. So anywhere you look in Europe, looks like a tough week starting to shape up. Anywhere you look in the U.S. markets, unless the Fed really surprises, looks to be the same sort of scenario. Then finally, if we go to Asia, Asia too. Remember on Asia, here's the Hong Kong market coming down on Friday. But remember, Asia was just doing a bearish retest, regenerate off of the prior swing point low. I talked about this for about 3 weeks now, even longer when we were first testing it. And so this market itself hasn't been able to even get back up and over that. That's the way you change trend, folks, and trend hasn't changed. It's still down here. We don't even have a sideways move yet. The only way you get that is to get over the swing point high and actually get over the top of the low that you're testing, and it hasn't been able to do it. So I suspect you're going to see some pressure this week. We'll see if the Fed shakes it up at all, but that's kind of where we stand. Thanks for joining me. Have a great night, and I'll see you next time. Good night.